SoFi has obviously had an incredibly volatile first year of trading, swinging in price by around 40% 3 separate times, from the mid $20 per share to the low teens. But in this video, I want to talk about SoFi's long-term potential, going over what a best case scenario for the stock would look like and what it would take to achieve that potential. And spoiler, I think the stock could 20x or more if everything goes right. But we're going to figure out its potential by analyzing each of SoFi's business segments, which are lending, financial services, and technology platform, and attempting to see how big those segments could end up being in the long term. We'll also look at other similar companies with larger user bases, such as Robinhood and Cash App, to see what kind of valuation the stock could see simply from adding more users to the SoFi Invest app. So hit the like button if you want, and let's start by talking about SoFi's current valuation and what could cause it to reverse direction and start rising once again. So SoFi has had a rough month, declining in price around 20% after their last earnings report. This puts them below the price they were the week that they went public way back in 2020, but still above the low that they saw just this past August at around $14 per share. But this most recent drop likely doesn't have much to do with SoFi's performance and has more to do with the fintech sector in general. If we look at Robinhood's stock price, for example, it's down a little over 20% this month. If we look at Upstart, it's down 40% this month. Square is similarly close, down 20% this month. So SoFi's own 20% drop really looks like it's just following the pack with its recent price move. Now, I know that I've gotten comments asking why the drop is happening, and I really think it's just that. And this now puts the company at a total market cap of around $14 billion. But now, how can we use this kind of information to predict SoFi's best case future stock price, the moonshot that all of us are hoping to see? Well, we're going to start by looking at SoFi's financial services, which we'll call SoFi app, since that's basically what it is. Then we'll go through their technology platform, also called Galileo, and then look at lending and try to assign a future potential value to each business segment as we go. So we can start by looking at financial services. This includes SoFi Invest, SoFi Money, their credit card, and basically everything that connects directly in some way to their SoFi app. Now, the best way to value SoFi's app portion of their business is based on their number of users, which we can compare to other popular investing apps like Robinhood or Cash App, which focus on a relatively similar type of customer. SoFi is really focused on targeting young people who have the potential to one day become very wealthy, but they aren't yet wealthy today. Cash App has a similar focus on young people, and Robinhood obviously got its start with young retail investors, and it is very popular on sites like Reddit that tend to have a younger audience, which we can either see by looking at a chart like this or by the fact that r/nuked memes has over 370,000 users. Zoomer humor is a weird thing. So right now, SoFi has 2.9 million app users, which they call members, almost like it's an exclusive club. And because each of their users tend to use multiple SoFi products, they have a total of 4.3 million products used last quarter. So let's compare this to Cash App and Robinhood. Cash App currently has 40 million monthly active users, so more than 10 times as many as SoFi. And they also have around 10 million Cash App card users, which is kind of like their version of having multiple products per user. Now, it's a little hard to value Cash App since it's owned by Square and not its own company, but Square currently has a market cap of around $100 billion, a little over 7 times SoFi's current market cap. Granted, that also includes the Square payments platform, which we'll talk about a little bit later when we compare it to SoFi's Galileo Technology Platform. Robinhood, meanwhile, has fewer users than Cash App at 22.5 million users as of Q2 2021, and Robinhood stock is currently sitting at $23 billion. In this case, Robinhood is a cleaner comparison for the SoFi app, since the whole company basically is just one app. And so they're getting a company valuation of roughly $1 billion per 1 million users on their app. So if we tried to value SoFi similarly, a $1 billion market cap increase for every 1 million new users, SoFi's app would currently be worth around $3 billion. But SoFi has said their long-term goal is to replace traditional banks, which they see as a $500 million accounts across 4,700 FDIC banks opportunity that will mostly be grabbed by one single winner, as they see the whole fintech space as a winner-takes-most market. Similar to how Amazon became dominant in e-commerce, or Uber in rideshares, or Airbnb in short-term rentals. So assuming SoFi is able to become the winner in this market, What percent of the overall fintech market could we expect them to control? Well, let's just look at winners in some other markets to help us figure that out. The biggest company in e-commerce in the US is obviously Amazon, which controls 41% of the e-commerce market share. Uber, meanwhile, owns 69% of the rideshare market, and Airbnb holds 20% of the entire vacation rental industry. And hey, that's not even accounting for the industry of house sitters renting out someone else's home on Airbnb. True story. Apparently a San Francisco couple was at Burning Man and their house sitter rented out their place for $2,000 in 5 days. And if that's not the most San Francisco thing I've ever heard, I don't know what is. But using those market share comparisons, if SoFi becomes the fintech winner, I don't think it's unreasonable to assume that they could grab 30 to 40% of those 500 million legacy accounts that are up for grabs. This would put them at between 150 to 200 million financial services users, which would give the SoFi app alone a valuation between 150 and 200 billion dollars. So let's just split that number down the middle and say if SoFi became the fintech winner, we would see a valuation for just this one business segment of 175 billion dollars. And that's not even accounting for the fact that SoFi members are a lot more valuable than most investing apps. We'll account for that difference a little bit later on. So for the SoFi app, we're going to set a future potential valuation of $175 billion. But next we turn our attention to SoFi's technology platform, which we have listed here as Galileo. That's because SoFi acquired a separate company called Galileo for $1.2 billion back in 2020. And that acquisition is the basis for their entire technology platform. Galileo is a platform for enabling digital payments, offering APIs that other companies can use to build their payments processing. This technology services division also holds a lot of SoFi's future potential for creating new products that aren't just digital versions of existing banking services. So unlike the SoFi app, this is more equivalent to something like PayPal or Square's payments processing service that powers those little terminals, like the ones you might have seen at trendy coffee shops where everyone who works there has tattoos, is way cooler than you, and you don't know how to pronounce the names of any of the drinks. SoFi's Galileo platform actually already has a pretty sizable user base of 89 million accounts, and they've grown that number by 80% over the last year. We could do a straight comparison to PayPal's 360 million users, but a more useful metric for this category is the revenue it is producing. SoFi's Galileo platform had over $100 billion in annualized payments processed through it in 2021, which produced revenues of $115 million. Meanwhile, Affirm, a buy now, pay later company that processes transactions for companies such as Peloton and Shopify, had $252 million in revenue. PayPal in turn had $21.5 billion in revenue, and Square had $16.7 billion in revenue. Now it shows these three companies, Affirm, PayPal, and Square, based on their product offerings, but it's a little hard to make a direct value comparison here since all of these companies have other parts built onto their payment processor. For pretty much all of these, the actual processing of payments almost acts more like an accelerant to their overall growth. Affirm, for example, has their lending business directly tied in with their payments, since you basically check out by getting a loan with them. This makes comparing their revenue to Galileo almost impossible. PayPal, meanwhile, has a $216 billion market cap, but that also includes Venmo, which has over 74 million users. So again, it's not easy to back out how much of their value is due to Venmo and how much is due to their payments platform. So that really leaves us with Square to try to make a useful comparison here. Now, Square is also a combination of both their Cash App and their payments processor, but we earlier calculated that investing apps are roughly valued at $1 billion per 1 million users. So Cash App's 40 million users would presumably set that app's value at around $40 billion. We can then use what's left of Square's market cap to figure out just how much the payments processor part of their business is actually worth. And I know this is a really rough estimate, but we're just trying to get ballpark numbers here. Not overanalyze like when an introvert is checking out at a store and can't tell how much he's supposed to talk to the checkout person, so you end up just not saying anything. Then you realize they asked you a question, but you don't know what it was. Just me? Well, if we just subtract out Cash App's $40 billion valuation from Square's $100 billion total market cap, that leaves $60 billion for the rest of Square's business, which can give us a rough approximation of how much they're worth from their payment processing. Since Square currently has an annualized revenue of around $1.9 billion, or around 19 times Galileo's revenue, I would say a $60 billion valuation just for Galileo is a reasonable future moonshot market cap, assuming they can one day become as dominant as Square is today. Granted, this segment could even be worth a lot more than that if they get as large as PayPal someday, but let's just use $60 billion as the market cap for this segment. Third up, we have SoFi's lending segment, which is actually their most profitable part of their business and the part that makes them the most revenue overall, which kind of makes sense since SoFi really started out as a student loan company. This gives them a big advantage in this area compared to any of the other fintechs that we discussed earlier, even ones that are much larger like Square. But one company we can use that has a somewhat comparable business is Lending Club, which makes around 72% of their revenue from their lending business and is also growing very quickly like SoFi. Currently, Lending Club has a price to sales ratio of 6. So if we took SoFi's lending segment revenue of $215 million in Q3 and then extrapolated that out for a full year, that would give SoFi a value of $5.1 billion for their lending segment alone today. But now let's look at what could happen with that valuation. So the private student loan market had $10.4 billion in loan originations annually before COVID, and the personal loan market was $81 billion per year, according to SoFi's competitor Upstart. Those are the two biggest parts of SoFi's lending business, but SoFi also offers mortgages, which adds on an additional $4.5 trillion in total addressable market. The largest mortgage originator right now in the country is Bank of America at $78 billion in originations per year. If we assume the mortgage company makes, let's say, 4% on that per year, this would equate to around $3.1 billion in revenue for them. So assuming SoFi was able to essentially replace Bank of America at the top without even needing to grow any larger than that, that's $3.1 billion in revenue from mortgages. Now we can also add on how much they would get from student loans and personal loans. Now SoFi already has around 75% market share in student loan refinancing. So assuming they could reach this same number for originations on student loans and personal loans, that would be an additional $68.5 billion in originations, which again at 4% would give them revenue of $2.74 billion. So add up all the potential revenue from all three lending segments, student loans, personal loans, and mortgages, and you get a total lending revenue of $5.8 billion per year, or around 7 times more than they have right now. That means that if we keep the price to sales ratio of 6 going forward, their lending business would be worth around $40 billion in total. Now these are probably the roughest numbers of all, and honestly SoFi lending could see a market cap of anywhere from $20 billion to $80 billion, but we can put down $40 billion as a placeholder for now. But even though we've filled in values for every business segment, there's one more thing we need to do before adding these numbers up. In addition to the value of each individual part of the business, we also need to account for the cross-selling ability that makes SoFi special. For example, a customer who signs up for SoFi lending on average will bring in about $800 in value over their lifetime, which is high for the industry. But if that customer was already a user of one of SoFi's financial services products, their lifetime value suddenly doubles to $1,600. And we see this show up in the higher value of SoFi's members all over the place. This chart from Finance TLDR shows that while SoFi has far fewer users than competitors such as Cash App or Robinhood, their revenue per user is way higher, at double Cash App's and more than triple Robinhood's. That means they technically should be valued higher than these other companies for the same number of users. And that also applies to their Galileo Technology Platform. While the platform itself does have value, it's way more valuable as an accelerant to their other products, such as allowing them to offer a free credit card by themselves, or move money between accounts without needing to go through a third party. Now, up until now, some of this value has not been as apparent as it should have been, because SoFi still needs to use third parties to accomplish a lot of what it does. But with their acquisition of Golden Pacific Bank being approved in March 2021, and with that acquisition hopefully closing before the end of the year, SoFi will obtain a bank charter, allowing them to operate much more efficiently and cut out the middleman completely. At this point, the cross-selling opportunity will essentially act as a multiplier for SoFi's overall value. So if we add up the market cap we calculated of SoFi's individual segments, it comes out to a total value of $275 billion, or around 19.5 times what they're valued at today. But if we add even a minor multiplier from SoFi's cross-selling abilities, let's say 20%, that boosts them to a market cap of $330 billion, which is 23.5 2.5 times their valuation today. If that multiplier is instead closer to 50 or 70 or maybe even 100%, that can make their potential valuation much higher. And seeing as we're seeing literally double the lifetime value of loan customers when they are cross-sold, these higher percentage multipliers might actually be reasonable, which is kind of crazy to think about, but we've seen valuations like this from financial services companies. Visa is worth $400 billion. JP Morgan is $460. Bank of America is worth $360 billion. So in the best case scenario where SoFi becomes the winner in the fintech market, I could absolutely see the stock price increasing 20x from where it is today. Now, I'm not saying that that's going to happen. No one ever really knows how these kind of things will play out, but I think it's valuable to understand what the North Star or moon that we're aiming for looks like. But let me know if you agree with this potential valuation or if you think it's the dumbest thing you've ever seen. And if you sign up for WeBull and deposit at least 1 penny for the month of December, you'll get 2 free stocks valued all the way up to $2,300. Don't forget to like and subscribe, and I'll see you next time.